You know, I did say in the tile that I don't think that this Bitcoin pump's going to last. I said it. I think that the Bitcoin pump is going to fail. Looks like it is failing. I'm going to show you why I think this Bitcoin pump was destined to fail. And I'll show you also when you should be buying, because it's going to fail, but when it does fail, there is going to be a point at which you should be buying. So I'm going to show you also where we should be buying. Then we've got a massive show. So we're going to be talking about Elon buying Twitter or trying to buy 100% of Twitter. We did predict that something like this would happen. We're going to talk about ETH. We're going to talk about some other altcoins. We're going to talk to you about Celsius. We're going to talk to you about Metaverse. Then we have to have a discussion about a name for my daughter, because I said I wanted Luna. My wife said no chance. My wife's grandmother's name is Rose, so she wants Rose. But now Rose is not a good project when you compare Rose to Luna. It's not a good project when you compare. I mean, it's not bad, but I mean, you know, if you can't call your daughter Rose, she's like, that's the top 50, not top 5. I don't know. We're going to talk about that, and I'm going to need your help as well. It's going to be a big show. We're going to have some fun. Let's do it.
Get the fuck out of bed, bitch. Go. Get up, and then they got go. Time to wake up, bitch. Get up. Get up. Get up.
Yo, Banter fam. Welcome back. This time I'm back with you, but I'm a dad, and I'm a dad of a baby girl. I finally got my baby girl. So now I've got 3 boys and 1 girl. But now there's big family feuds in the house. Let me tell you, there's massive family feuds in the house, because I wanted the name Luna for the girl. I think it makes sense that Luna is a great name for a girl. My wife, her grandmother, her name was Rose. And now my wife wants to call the baby Rose. Now, I just can't wrap my head around calling the baby Rose when we know that Luna's way higher up on CoinMarketCap. But listen, be that as it may, we'll keep fighting the fight. The minute that my daughter was born yesterday, we got this Bitcoin pump. So you want to know when this Bitcoin pump happened, this candle over here, that was exactly the moment that my daughter was born. Exactly. So we owe this pump to her. We really do. We owe the pump to my new daughter. No, my wife's not hearing anything about Rose. I mean, about Luna, nothing. Doesn't want to know about it. I'm trying to explain to her that Luna has changed our entire lives, and she just won't get it. She just doesn't get it. She wants Rose. Well, is it bad if I call her Rose? No, it's not going to work. This is going to, I mean, we could theoretically have a daughter that's not going to have a name for like weeks now until we can agree on something. Because if I don't, yeah, I mean, if I don't agree and she doesn't agree, then what happens now? So I mean, would we just not have a name until we both agree? Sounds weird. Anyway, let's get into crypto. That's me. I'm back. Remember, tomorrow there's probably not going to be a show because it's Easter weekend, so we're giving everybody a holiday over here. I may come in on the weekend and do a show. I've got a good idea for a show for the weekend, so I may come in on the weekend. Obviously, if anything happens on the market, you know we will be there. We will be right there, even if it's Easter weekend. Anyone who's celebrating Easter, wish you a blessed Easter. Wish you everything of the best. Anyway, let's go into crypto. And we do have a big show today. Just before that, do me a favor. Smash that like button and subscribe to our channel. And if you haven't already subscribed to our Microdose channel, I'm not going to play this because it already got a copyright strike. Go and watch this Thank You Gary Gensler video. It'll be the best 5 minutes that you spend today. I promise you it'll be the best 5 minutes that you spend today. While you're there, subscribe to the Crypto Shorts. We're changing the name from Crypto Banter Microdose to Crypto Shorts because we just think it's much clickier. Remember I told you that, I told you in the beginning, I said, the first thing I did when we changed the name from Microdose to Shorts is I went and I registered all the domains that had to do with crypto shorts. So I registered cryptoshorts.com, then I went and I registered cryptoshorts.nft, .eth. I registered literally all the crypto shorts domains. I left out one. Domain. I'm not going to tell you which domain it is now. The reason why I'm not going to tell you which one it is because now I'm dealing with another negotiator, another hostage. I'm negotiating with another hostage. He's got crypto shorts something that I want, and he's not giving it to me. And I'm scared if I tell you guys what it is, then you guys will go and front run me and try and buy it from the hostage negotiator. But now I've got a massive problem. The moral of the story is, and you have to do this, you have to do this. Go to Unstoppable Domains. There's a referral link below, but if you don't want to support the channel, don't even use the referral link. Register your name, your potential business's name, because once these NFTs are gone, they're gone forever. You'll never have that domain ever again. And you'll be negotiating with terrorists, like I'm negotiating with terrorists again. Look, it's not the end of the world because I do have .crypto, I do have .nft, I do have .eth, I do have .sol, I do have .com, but left out one. I can't believe it. Anyway, go and do it. Do yourselves a favor. If you have a business or if you're thinking of a business, do it. All right, let's talk crypto. Let's talk about this pump. And now what we're seeing is this dump. In fact, before we talk crypto, should we talk about Elon? Let's talk about Elon making his an offer for 100% of Twitter. So you remember that Elon made an offer, or Elon bought 9% of Twitter on the open market. And then he was offered a board seat at Twitter. And he declined the board seat at Twitter. And you remember that we said that one of the reasons why we think he's declining is because we think that he wants to buy more of Twitter. And if he were to take that board position that he was offered, his ownership would be capped at around 14 or 15%. Anyway, today we got Elon Musk tweeted, he said, I made an offer. And if you look at the offer, so this is super, super interesting. He writes a letter. These are the disclosures, by the way, from the SEC statement. I'll try and make them a little bit bigger for you, because remember, in the US, if you want to make an offer to buy at everybody, you've got to go through the SEC. And he says here, he writes a letter to the chairman of the board. He said, I invested in Twitter as I believe in its potential to be the platform for free speech around the globe, and I believe free speech is a societal imperative for functioning democracy. However, since making the investment, I now realize that the company will neither thrive nor serve the societal imperative in its current form. Twitter needs to be transformed as a private company. As a result, I'm offering to buy 100% of Twitter at a share price of $54.20 in cash, a 54% premium over the day I began investing in Twitter, and a 38% premium over the day before my investment was publicly announced. My offer is my best and final. And if it's not accepted, I would need to reconsider my position as a shareholder. Twitter has extraordinary potential. I will unlock it. So much to read into there. First of all, it's 100% offer. Second of all, the offer is at $54.20. So let's just understand what that means. When Elon Musk started buying, the price was at about $31. You can see that over here. When he announced that he bought, this is what happened. So we went up to $54, and then we came down to about $45. And now we're trading at about $47. The board of Twitter is meeting right now as we are on this live stream. The board of Twitter is actually meeting to decide whether or not they should be accepting this offer. So that's what's happening right now. Interestingly enough, in the disclosures, you can see that Elon has the script. He says, as I indicated this weekend, I believe the company should be private to go through the changes that need to be made. After the past several days of thinking over, I've decided I want to acquire the company and take it private. I'm going to send you an offer letter tonight. It will be public in the morning. Are you available to chat? And then it says here, voice script. Best and final. I'm not playing the back and forth game. I've moved straight to the end. It's a high price and your shareholders will love it. If the deal doesn't work, given that I don't have the confidence in management, which is exactly what I said, I knew that Elon wouldn't be able to work with Parag. I just think that they at Twitter have this culture of entitlement and protecting and no free speech. And Elon is going to go in there and he's going to wipe this whole slate clean. I can tell you that much. You can kind of see that's what's going to happen. He says, if the deal doesn't work, I don't have confidence in the management, nor do I believe that I can drive the necessary change. And then he would need to reconsider my position as a shareholder. So what this means is he's kind of saying, look, if you don't accept my offer, then I'm actually going to dump the shares. And if I dump the shares, then you've got a serious problem because then your price is going to go down. Big question is the Twitter board going to actually accept this offer? Is the Twitter board going to accept the offer? So let's look at who the board is, who actually decides. So these are the shareholders that need to vote. Vanguard, Morgan Stanley, BlackRock, Aristotle Capital. Jack Patrick Dorsey has 2% of Twitter. He has 2% of Twitter. He also needs to vote as to whether Elon Musk can actually take Twitter public. Okay, so that is what's going on. Let's see what the big names think about this offer.
Will this fly, Dan?
I think this is basically going to put Twitter back against the wall. They're going to either have to accept it through a strategic process, but there's really no way that Twitter, in my opinion, could reject this, because ultimately, from a fiduciary perspective, he put such a premium here, and obviously he has the cash, that now back against the wall, and really I think the street's going to read this as Twitter's going to get sold, and ultimately it's Musk that's going to buy it.
Well, is it Musk that's going to buy it? Or is it Justin Sun? Because Justin Sun from Tron. Justin Sun that used to work for Ripple, believe it or not. Justin Sun, who's now, he's not in crypto anymore. He's, let's just quickly, I think he said he's His Excellency, Justin Sun, because it's His Excellency, because now he's in politics. I believe Twitter is far from unleashing its full potential. Thus, I'm offering $60 per share. So he's offering $60 per share to take the platform private. But we fully support the reform initiatives of Elon Musk and would love to see Twitter becoming crypto native and Web3 friendly. Now, I wish that this was a joke, but I actually don't think that Justin Sun is joking. I mean, you don't go with a name, Your Excellency, His Excellency. His Excellency can't make an offer for Twitter and then not follow through with the offer. His Excellency Justin Sun. So I wonder who's actually going to get Twitter. Is it going to be Elon Musk, or is it going to be His Excellency? His Excellency Justin Sun. His Excellency. His Excellency. Where's Ryan's title? Oh yeah, I need a title too. Okay. Okay, let's address the elephant in the room. I know you guys don't like it when I do those kind of tiles over there, the ones that say this pump will fail. But I've got to be real with you guys. I'm going to show you why this pump is going to fail. So if you look at this pump and you look at where we are in the pump, you will see that's not the pump. That's a Twitter chart. If you look at the pump, that's the pump over there. And you can see that it pumped yesterday. When we got to about here, I published, oh, you can't even see my screen. Thanks, guys. Thanks, you. Great to see everyone's awake here. So when it was over here, I said, look, this pump isn't going to last. Got to tell you guys. And so I made this thumbnail, and I said, the pump isn't going to last. And the reason why I think this pump isn't going to last is very simple. We saw the inflation numbers, and the inflation numbers were the worst that they've ever been. And even though some people believe that we are about to thrive, and I think I agree with this. So if you look at Dan Morehead, he says, I've long advocated that as market becomes broader, more valuable, and more institutional ownership, the pricings will be more moderate. He says, while we've had 280% bear markets already, I believe those things are part of our past. Future bear markets will be shallow. The previous two have been minus 61 and minus 54. Unfortunately, there's no free lunch. The flip side is what we'll see. We won't see the 100x rallies anymore. I think we're done with the bear market, minus 50%, And we're now on the way to the new rally cycle. The next 6 to 12 months, we'll see a massive rally as the investors flee stocks, bonds, and real estate markets for blockchain. Okay, now this is not Justin Sun talking. This is Dan Morehead talking. He's actually very smart, and he runs Pantera Capital. So His Excellency Dan Morehead says this. So the reason why I think that this pump is going to be short-lived is because of the inflation numbers that were released 2 days ago. Yes, they came out at 8.5%. Everyone is panicking. The real inflation numbers are actually way worse. So the real inflation numbers, I got this chart, which is called the Flexible Price Consumer Index, which includes energy and includes food. That's the only difference. And if you look at this chart over here, that has now peaked at 25.1%. And this is an official Fred chart. This is not some YouTuber or some Twitter. This is an official chart. And it says that the inflation, when you add in food and energy, is 25.1%. Okay, so that is what the inflation numbers are. And the reason why this is linked to the pump is because we got a narrative now. The White House has created this narrative that this pump or that this increase in inflation is because of Putin. You'll remember this.
So because of the actions we've taken to address the Putin price hike, we are in a better place than we were last month. But we expect March CPI headline inflation to be extraordinary.
So remember, they called this the Putin price hike. They call this the Putin price hike. And that's the narrative. The whole narrative is the reason why inflation is running. It's got nothing to do with Joe Biden. It's got nothing to do with anything else. It's got to do with Putin. And Joe Biden says Putin's invasion of Ukraine has driven up gas prices and food prices all over the world. 70% of the increase in price in March came from the Putin price hike. So now the official narrative in the White House is Putin price hike. These are the official narratives in the White House. One, transitory. Then it was greedy corporations making money. Then it was supply chain bottlenecks. Then it continued to be supply chain bottlenecks. Then it became oil prices in Feb. And in March, it's the Putin price hike. So that's the narratives that the White House is adopting. And you can kind of see that they're all doing it. The reality is, though, that the Putin price hike is actually starting to affect the markets quite a bit. So we're getting high inflation. That's one thing. But we're also starting to see corporations and companies take huge losses. So we had JP Morgan taking a massive loss. We've now had Goldman Sachs taking a $300 million loss on Russia in the first quarter. Because remember, all of these banks have exposure to Russia. And then we saw Citibank also getting exposed to Russia. And now the new narrative that the Fed is starting to drive is that we've seen the end of inflation. We've seen the top of inflation. Inflation is going to come down. It's absolute garbage. Remember that the same people that told you that inflation was transitory, inflation was caused by supply chain bottlenecks, these are the same people that are now telling you that inflation has peaked. Yesterday, Waller came out of the wall in the Fed, and he said that, or he or she, is Waller he or she, whatever, came out of the wall and said, inflation has peaked and will start to fall. Okay, so they now really believe that inflation will peak and it will start to fall. Now, this is why I think that this pump is a really bad pump. Let me cut the chase. Let me get the point. The reason why this pump is a bad pump is because the market is playing a game of chicken with the Fed. The Fed needs the markets to slow down. The Fed cannot have the markets at all-time highs. And if you look at the markets today, the markets are pretty much very, very close to all-time highs. If you take the S&P, you'll see that the S&P right now, it's 7.5% away from the all-time high. That is not what the Fed is looking for when they talk about slowing down the markets. So if the markets continue to pump, and if the markets continue to go against what the Fed need, then what we're doing here is we're fueling the Fed's aggression. And then we can expect increased quantitative tightening, increased interest rates, and a very, very, very hawkish Fed. Now remember, the March numbers came out a day or two ago, and we have to wait until the FOMC meeting, which only takes place on the 4th of May. Now, the Fed's going to meet on the 4th of May, and there's a 91% probability that they're going to raise the interest rates by 50 basis points, which is 0.5%. That's what the market is predicting. Now, the problem is that if the markets continue to run, then we're leaving the Fed with no choice but to be super aggressive. And the Fed will be super aggressive until they get the markets to cool down. That is what they need to do. They need to get the markets to cool down so people stop spending, so that they can stop getting inflation. And so it's exactly what Chamath said. Chamath said it, and I played it for you guys before. I'll play it for you guys again. He says, we're playing a very dangerous game of chicken.
I think that we're playing a very dangerous game of chicken with the Fed. And you can kind of summarize it in the following way, which is that, 3 or 4 months ago, we only thought that there was going to be a handful of interest rate increases. And increasingly what has happened, the market has remained so resilient that the Fed has sort of put out more and more data as the data has justified them being a lot more aggressive. And it kind of crescendoed this past week where they basically said, listen, we're going to move by 50 basis point increments for the foreseeable 2 or 3 rate hikes, and we're going to start quantitative tightening. What does that mean? That means that instead of basically...
So they're going to increase by 50 basis points, and that's now, I would say, becoming an absolute certainty that they're getting 50 basis points. But they can even become more aggressive. If the markets don't respond to a 50 basis point rate hike, you know what's going to happen. They're going to raise by 75 basis points the next one. And we don't want that. And that's why I think that what's going on here is very scary. I would prefer for Bitcoin and for the markets to remain pretty flat between now and the May meeting. Even though there's so much money in the economy and people want to invest it somewhere, they need to hold back, because if they don't, then we're going to spur the Fed on to be super, super aggressive. And if that happens, well, then we are going to see quite a lot of cooling down or slowing down or whatever you want to call it. What else is there? So, you got to question, you got to question Bitcoin's position as an inflation hedge. And we know that the market has actually been pricing Bitcoin as a growth stock and not as an inflation hedge. And you can see that someone did this chart, which is actually quite an interesting chart. So what it shows is the CPI number and the price of Bitcoin. Okay, so what was the price of Bitcoin when the CPI number came out? So when the CPI was 8.5%, which is the highest that it's ever been, the Bitcoin price was 40,000. When the CPI was 7%, the Bitcoin price was 42,000. When the CPI was 5.3%, the Bitcoin price was 45,000. When the CPI was 4.2%, the Bitcoin price was about 52,000. And so people are questioning whether Bitcoin is an inflation hedge. And right now, it's unfortunately, even though by design it is designed to be an inflation hedge, it's actually not an inflation hedge. It's not acting like an inflation hedge, because as inflation goes up, the Bitcoin price is actually coming down. And that's not what you call an inflation hedge. So that is one thing that we should be questioning. We're going to bring on Jordi as soon as he comes on. And he says, here's some alpha for you, when to buy risk asset dip. Remember that Bitcoin is risk assets. If the treasury yields or the treasury prices are going down and stock prices are going down, then that's not the time to buy. When they finally react, in other words, when this orange line reacts, that's when the market believes that we've bottomed. And so I want to get him on here. As soon as he comes, I'll bring him on here, and we can ask him when the right time to buy the dip is. Here he is. Wow, perfect timing. I see him. Jordi, welcome, brother.
Hey, how are you doing? Congratulations, by the way. That's amazing.
Yeah, exactly. Perfect timing. Perfect timing. I like your background, by the way. Where are you?
I'm in my office, and we have like this purple reflection. It kind of fits with your colors, actually.
It's perfect. It's part of the Banter fam. Jordi, we got you exactly on time, which is talking about when you think it's time to buy the dip. And I think maybe let's go one step back. So we got the inflation numbers, and the inflation numbers are ridiculously high. We're now seeing the dollar index, the Dixie, going pretty high, which is a sign that we're expecting quite aggressive interest rate hikes, and everybody's starting to move back into USD. You've got, at the same time, you've got the bond rates going, well, bond yields at 2.78%. Tell us how you see the lay of the land now before we start talking about when it's time to actually start buying.
Yeah, so the most interesting thing to understand from a macro perspective is what kind of part of the cycle are we? There's parts of the cycle where stocks and bonds are inversely correlated. They're going in opposite directions. And we can take a look at I have a chart where, let's see.
Let's share your screen. I think that'd be amazing.
All right, just give me 1 second here.
While Jordi is sharing his screen, guys, smash the like button. Tell people we're here. Tell people we're here. Remind people we're here, because I wasn't here yesterday. Because Luna was being born. See, it's already. It's got a clicky. It's got a clicky thing now, Luna. It's got a clicky thing. No matter what you name it now. So, I can't imagine I'd land up with Rose. I had a baby girl yesterday, Jordi, and I want to call the baby girl Luna. It makes sense, right? With the performance of Luna, it makes perfect sense. It's also a beautiful name. It's a beautiful name. My wife's grandmother is Rose, so she wants to call it Rose. But now Rose is not even half as good technology as Luna is. So the problem is I'd be naming my daughter Rose, but I mean, it feels weird to name her after a technology which is not as good as Luna, right?
I heard Do Kwon might name his daughter Luna. That'll be an interesting coincidence if you both do that at the same time. I heard it's a rumor. It's a rumor.
He's made a lot more money on Luna than I have, that's for sure.
Yeah. I'm trying to share screen, but I don't have permission on it, and I'm gonna have to restart if I do. So maybe I can just kind of walk through.
Walk me through it, and I can call up charts. Don't worry.
Yeah, if you can bring up maybe just the equity chart, just an SPX chart, and we can kind of look over like the last few years, what's been happening.
Here we go. You got an SPX chart in front of you.
All right, let's zoom out. Let's get like a few years on. So let's go maybe to like 2019. That's a really good example.
Okay, so let me quickly get into a 1 week chart, because I think it makes it a bit easier to see. There we go. So you got 2019.
Okay. Yeah. Beautiful. So we have two dips. One is at the end of 2019. We have this like end of year dip. I don't know if anybody remembers, around Christmas, we had this big dip. And that was the famous Fed pivot where Powell completely backed off. They said, okay, we're not going to raise rates. We're not going to stop QE. And then the market, you can see it just resumed going up and up and up and up nonstop, especially with the Trump years. You know, he was kind of like happy to pump. And then we have the massive crash again, 2020. This was the COVID crash. And again, the Fed at this point just goes to zero rates, quantitative easing. And then we start, the engines start again, up, 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 up. So these are periods where stocks and bonds are inversely correlated, because what's happening is stocks are leading. They're leading down, and then the Fed responds. But now this is the scary situation. We're in a different part of the cycle. And at this point, bonds are leading. And why is that? Because number one priority is inflation. So given that inflation is the number one priority, it's the tail is wagging the dog. So bonds are actually starting to pull equities down, and it's not the other way around. So what I've been saying is the point at which...
Hold on for 1 second. Yeah. For people who are not economists, or people like me who were economists but now forgot because we became vaccine specialists and now we're Russia-Ukraine specialists, so we've forgotten a lot about our economics. Why is the bond rate so important? Why do you say the bond rate is leading? If I read this from a layman's point of view, what it says to me is that people are selling bonds. People don't want bonds, and therefore the yield rate on the bonds is going up, right?
Yeah, that's correct. Yeah. So
why don't people want bonds?
People don't want bonds because the interest rates are going to go up, so they're going to be able to buy them cheaper later. They're saying, why should I buy bonds now where their effective yield is 1%, 2%, when if I just wait until the yields go up, I'll be able to buy them and get 3%. So they're throwing them away into the dustbin, and they're waiting for the higher rates before they start buying again.
So they take the money out of bonds, and they also know that the Fed or the Fed is now going to become a seller of bonds. So they're saying, look, I'm out of bonds because the Fed's going to be selling bonds into the market. There's no more buyer in the market. That buyer's gone. And what do they do with the cash?
So, there's not many things to do with the cash. You either put them in equities, which is why equities haven't completely collapsed, because some people are just like, well, might as well put them in equities. It's not a terrible choice because, they're not completely crashing, but at the same time, it's not a great place to put them. So this is one of those situations you don't have anywhere to put them. This is potentially long-term bullish for crypto over the next 6 months, because at some point, one of the ideas will be, well, we can put them in crypto, we can put them in Bitcoin, Ethereum, and that kind of reinforces a new narrative where, gold is obviously like the traditional one as well.
Yes. Okay. So traditionally, what happens is people go out of bonds and they go into stocks, or they go out of stocks and they go into bonds, and it's kind of like a seesaw effect, right? Money goes from one to the other. What's happening now? Money is going out of bonds and money is going out of stocks.
Yeah. So this is what is a deleveraging. So if you ever trade crypto markets on futures exchanges, you see you can go 1x leverage. If you're really bullish and you don't think prices are going to go down, you can go 2-3x leverage. So historically, we have to kind of find the balance on leverage. And, during a recession, people are too scared. So we have under leverage. We're not committed. Lately, because we've been in full bull mode, we've been over leveraged. And some of the air that's taken out of the market is basically, people getting liquidated, and not just in crypto getting liquidated, but in real life, like in equities and everything else, are getting liquidated.
In real life. Crypto is not real life.
Yeah. Not just in digital assets, but people that are like building houses in China, like all those companies that have been investing, leveraging up, borrowing money to build houses to sell them, and then there's no buyer. So that's a huge deleveraging event where all the debt that they took, they can't pay it back. So now it's a huge deleveraging across the world. We've seen Sri Lanka, they just defaulted on their national debt. So it's just, it's not like a huge important country, but it's a sign that some of the countries are deleveraging as well.
It's just not looking good out there. All right. So now tell me, so you're saying, look, we're in a dip. At some point, the dip's going to turn. And you think that this indicator will tell us when it's time to start buying the dip. And you're saying when the price of bonds starts to increase again, then that's the time to start investing again, or to start buying risk assets again, right?
Yeah. So there's one thing we don't know, which is what is the kind of neutral rate in the economy. So every few months, the Fed puts out projections, and all the members, they vote and they say, we think the neutral rate is 2% or 3%. They try to estimate what does it mean to be neutral. So neutral means you're avoiding recession and you're avoiding inflation. You're like in the middle, you're neutral. Your car is kind of just going along. So they've said it's 2.5%. Now we see bonds, they're going up to 2.8. So this is potentially a sign that they will have to over tighten first to really slow down the economy. This is demand destruction. So they want to hurt asset prices so that people stop purchasing houses all the time and stop purchasing things. Now, of course, there's a disconnect in the world. There's people who have no savings. They're barely getting by, and inflation is pushing up prices against them. And then you have people who have owned all the assets, and assets have, 2-3x. So they've made so much money. I think what the Fed is going to try to do is take away money from the people who have too much, support some of the people on the bottom, and keep the economy going without a recession, the so-called soft landing.
How do you do that? How does the Fed do that?
It's a tightrope. I think what the market is saying right now is they will first go above neutral. So they will scare the market. They'll say, okay, we're saying neutral is 2.5. We are going to push too hard. We're going to slow you down. They probably want asset prices to go down a little bit just to cool things off. And then, the game is going to restart as soon as they see that it's time to lay off. They've pushed too far. So we don't know when that is. I think we still have a little bit of way to go. I would agree with you. In terms of equities, there's more demand destruction going to happen.
I must agree. I think that the Fed's watching this, and I think that equities are playing a very stubborn game at the moment. So if you look at equity charts, and I showed this, if we're 7% off the all-time highs, we're giving the Fed license to be as aggressive as they need to be to, as you say, slam the handbrake and slow things down aggressively. And that's my concern. My concern is when I saw the Bitcoin pump yesterday and I saw the NASDAQ pump yesterday, I thought, this is exactly what this is the worst case scenario for the markets, because they're telling the Fed that it's okay to act aggressively. And that's the part that's worrying me. And that's why I think I wouldn't trust any pump between now and the 4th of May, unless there was a real fundamental reason for it. I wouldn't trust any pump between now and the 4th of May, because any pump between now and the 4th of May just gives the Fed license to pull the handbrake up.
Yeah, so they've basically said today, like Fed Williams, like you said, 91%. They are saying they're going to do 50. So the market knows they're going to do 50 bips. They're going to do 50 bips again, and probably like they'll do one more. I think we'll get to 2%, and then at that point, things start to slow down. So we're going to have a little bit of a period where instead of having a Fed put, historically, when the market crashes, the Fed is there as a put, as a call option. They're going to just help avoid really bad scenario. Now we have the opposite. We have a Fed call. We have a Fed call. So as soon as things go up, they're just going to keep like pushing them down. So you don't want to kind of ride it too high. I think you can still buy stuff. I was on your show a while ago and I was saying, we're going to have a few opportunities to buy Bitcoin at 35 and sell it at 45. So we've since then it's been a month. We've already had a full 35 and 45. I'm not sure if we're going to get a 35 again. I'm definitely going to be buying from 38 pretty hard.
I agree.
But yeah, I don't think we get that low. I don't think we get that low.
You know what? You know how I see it? I think we're acting, or I'd say the market is acting like a bunch of spoiled brats. And I'll tell you why I think the market's acting like a bunch of spoiled brats. Because we all went to the party and we all got stupidly drunk. And as we were drinking, we kept saying to each other at the party, wow, we're going to have such a hangover tomorrow. We're going to have such a hangover tomorrow. We're going to have such a hangover tomorrow. Now the hangover is here. The market wants to keep drinking. And we're going, but look, guys, we spoke about the hangover. You have to have the hangover. And I think that's what's going on. The market doesn't want to understand the hangover. So that's what's going on.
Yeah.
All right, Jordi, thank you, brother. You've given us awesome perspective again. Much love from the fam.
Bye-bye.
Ciao, ciao. We just don't want to have the hangover. Oh, okay, let's see what else, because there's a lot of news and we're running out of time and I want to do double your portfolio and there's a whole lot of other stuff that we want to do today. So what else is it? Okay, you have to watch this. You have to go to the clip. Promise me you're going to do this and you're going to subscribe to the channel. Go and watch this. Thank you, Gary. It's a funny video. Very, very, very funny video. And I'll tell you what it's about. So we've just had the biggest inflation print that we've ever seen in history, 8.5%. What does that mean? It means that the average American is getting poorer at the rate of 8.5% a year. The average American is getting poorer at 8.5% every single year. That is infuriating. But don't worry about it. Because what the average American can do is they can go to places like Celsius. And they can earn at Celsius, they can earn like 10% on their stable. So if you're earning 10 and inflation's 8.5, you're making 1.5%. Nothing to worry about. It's amazing, right? The average American can beat inflation by investing in Celsius. Well, no, not according to this clown over here. Now, this dude, he is the guy that's responsible for protecting the average American, right? That's what this guy is all about. But the reason I'm not playing the sound is because that's what's going to give us copyright strikes. So what does he do? In the guise of protecting investors, he forces Celsius to make an announcement. And in this announcement, what they say is that United States users, they says, verified accredited investors in the United States will be able to add new coins and earn into their accounts. But if you're not an accredited investor, non-accredited investors in the United States will be held, the coins can be held in the Celsius custody, but they will not earn rewards. So what he's saying is as follows. He's saying, if you're an accredited investor, in other words, you're rich, then you can earn interest in high yield crypto interest. If you're not, then if you're a poor guy, if you're one of the normal Americans on the street that's living, well, you can't earn high interest. You're not allowed to. This is the guy that is supposed to be protecting investors. Okay, now you think I'm joking. This Russell Klein guy says there are two Americans. One has a net worth of $5 million and makes $250,000 a year. The other one is in debt and makes $40,000 a year. Now they both send their money to Celsius. Only one of them can earn passive income. Do you get this shit? This is what the SEC, who's supposed to be protecting the regular investors, is all about. Now get this, because it actually gets even worse. If you want to be accredited, you have to have $1 million, excluding your primary residence, and you got to have an income of $200,000 a year. But the SEC want to increase this. And they want to propose the limit to go up to $10 million. Protecting investors. Protecting investors. What the fuck? What the fuck? An interest-bearing product is a security. What's the SEC dabbling in security? Listen, what you need to do, just go and watch this. I can't go there because if I press this button, I'm going to get this video copyright strike. Go do that. When you're there, do me a favor and just subscribe to the channel because that's where we drop 10 videos a day sometimes. 10 videos a day. So subscribe to this Microdose channel. Trust me, you want to do that. You want to do that. All right, let's talk about something else that's going to make my blood boil less. Actually, not while my blood is boiling. Let's go to blood is boiling. Blood is boiling. Meta, Facebook. Remember they made this whole announcement that they're going to be going huge into Metaverse and NFTs. Well, they are going huge into Metaverse and NFTs. Huge. They're going to make much more money than ever. You know why? I'll show you why. Because they want to charge 47.5% of every NFT. 47.5%. Okay. Meta's cut on NFT sales in its Horizon World Metaverse. Okay. 47.5%. Now you want to hear the best part of this. Number one, it's a centralized metaverse. We know that. The second thing is what you buy when you buy the NFTs. You're buying a Web2 NFT, not actually even buying a real NFT. You're buying like a Web2 JPEG. You're actually buying a JPEG, and you're paying 47.5% to Facebook. Can you believe it? Can you believe it? Okay, now the blood boils stuff is finished. Now we can talk about more fun stuff. Janet Yellen. Okay, so Janet Yellen reminds me of a very, 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 very loyal servant. Because now, ever since Joe Biden has come out and he said, you need to make crypto regulation friendly, she's changed her tune. And I was listening to her. She sounds like a blockchain lecturer. She's nearly convinced me to invest in blockchain.
Most recently, new technology has raised of reduced reliance on centralized intermediaries like banks and credit card companies. In 2008, a person or group of people using the pseudonym Satoshi Nakamoto.
She's teaching blockchain.
Decentralized peer-to-peer system for making and processing.
So that made me kind of happy that now Janet Yellen is singing a nice tune. What else is there? Let's quickly do this. Let's quickly see what else is. Oh, there's ETH 2.0. Okay, wait, I'm supposed to do this quite dramatically, right? This is like the part where you go, in breaking news, ETH 2.0 is delayed again. I mean, everyone knew it was going to be delayed, for God's sake. There's no news here. It's delayed. It's now been pushed to Q3. The market was so shocked about this. Let me show you what happened to the ETH BTC chart when this happened. The market couldn't believe just how the market was so surprised that the price of ETH went down by 0.96% on this announcement. 0.96% decline in the price of ETH because everybody knew that ETH 2.0 was going to be delayed. So it's going to be Q3. It's not going to be Q4 this year or Q3, Q4. So there was no surprises there. Everyone knew it was going to happen. Lastly, I want to show you the world's best investor, and it's not Fred and it's not Kyle. It's Jimmy.
Yeah.
Not Jimmy. Okay, I want to show you the world's best investor. You want to see the world's biggest rag? Guys, you want to see the world's biggest rag? Let me show you the world's biggest rag, okay?
The last time I got in trouble for sharing those things.
Let me show you the world's biggest rag. Remember Jack Dorsey? Remember he sold a tweet. His first tweet as an NFT. He sold that. He minted it as an NFT. And he bought it for this guy called Estavi. He bought it for $2.8 million, I think, right? Was that the number? 2.8? He bought it for $2.9 million. For $2.9 million. Anyway, last week he listed it on OpenSea for $48 million. What a brilliant investor. He listed it for $48 million. the auction ended up with a top bid of $280.
Does that mean he had to sell it? No.
No, but that means that the market only has an appetite. He paid $2.9 million for this NFT of a tweet, okay? And he got his best bid now is $280. Okay, now, whenever you thought that you FOMO bought, and you bought the pump, just remember Estavi. Remember Estavi. We should use Estavi now forever. Don't be like Estavi. Don't buy the pump. Don't be like Estavi. Okay, it's that part of the show again where I double. Let's 10x someone's portfolio because there's no show tomorrow. So we're going to do this. We're going to 10x someone's portfolio. Up to $1,000. Again, I'm saying up to $1,000. Okay, so here's how it works. I'm going to double 4 portfolios and I'm going to 10x portfolios. If you want to be part of this, there is a link that's to ByBit. You go to that link. Let me explain to you. You go to that link. You click the link and you open an account using that link. You deposit money into your account. You don't have to trade. You don't just put money into the exchange. And then if I select your account, then I will double your account. Okay, but first, let me hide this row because otherwise I can see how much money people have got. Now, I'm going to 10x the first one and I'm going to double the next 4. Is that fair? Okay. So let's find the, let's just scroll down to line number 6,900. First one is going to get doubled. It's going to get 10x'd. Then this one is going to be doubled. This one is going to be doubled. This one, again, I only double up to, what do we say? $5,000, eh? Okay, $5,000. All right, here goes. Remember, it's line number 6,900. Okay, line number 6,900. What's it going to be? What is the magic number going to be? 6,900, 6,900, 6,900. What's it going to be? Am I going to get hit for a big one today? Let's see. No, it can't be. It's up to 1,000 on the 10x and up to 10,000 on the others. The guy's got $1. I was about to 10x this guy's account. The guy's got $1 in his account.
Look at the comments. He's got $11 now.
100x.
$1.
100x.
Why is it in red?
Because that's the one I said I was going to make 10x. $1.
I thought he was in the red because he got liquidated. Don't be like
$1. Don't be like Estavi, guys. Don't be like Estavi. All right, but we're also doubling 30. We're doubling 621. We're doubling 1168. It's respectable for the weekend. There's Easter weekend now. Easter weekend, $1,160. It's respectable.
It's going to be over the moon.
And $61, double. Amazing, fun. All righty, guys. Listen, I'm going to go spend time with my new daughter. I'm going to go spend some time with Luna. She'll always be Luna in my eyes. I'll see you guys again over the weekend, and if not, I will see you guys on Tuesday. Okay, there's no show on Monday. There is a show on Tuesday. I will be live on Twitter. Where, by the way, on Twitter, I do have now, I've got 600,000 followers. Don't be impressed because I broke them down on the tweet. I broke them down. I don't know if you guys also, I did an analysis. I bought a tool that does an analysis for you about who your Twitter followers are. So I got 600,000. My mom and dad are 1, 2. Then there's Fred, Kyle, Jimmy, all the guys that work here. That's 65 people. They have to follow me. They have to, otherwise they get fired. Then the haters. So Zach XBT, Simons Vastos, Crypto Michael, all those like useless parasites in the ecosystem. That's 3. So then crypto spam bots. There's 500,000 crypto spam bots. Then 2017 retail investors that are no longer around because they blew themselves up. There was 50,000 of them. And then I got you guys. I got the Banter fam, 49,930 of you. Love every single one of you. See you guys on Tuesday. Until then, subscribe to ByBit and put money into your account so you don't have $1. And remember, if you do have a business, support the channel. Go buy the NFT domain because if you don't, somebody's going to buy it and you're going to be negotiating. See you guys on Tuesday. Until then, trade well.
button.